Welcome to Bulls and Bears, where we explore ASX-listed companies that are doing interesting things. I'm Matt Burney and I'm joined in the Perth Bulls and Bears studio tonight by Alan Steen, the Managing Director of topical oil and gas explorer Kallima Energy. Well, good evening, Alan.
Good evening, Matt. Nice to be here.
Great. Alan and his team at Kallima Energy previously took a small unlisted oil and gas company known as Ophir Energy in the UK from just 38 pence a share in the first round of seed capital to a listed company on the London Stock Exchange with a share price that maxed out at a whopping £6 a share with a market cap of some £2 billion. Well, that same team of technocrats, now at the helm of ASX-listed small-cap oil and gas rising star Kallima Energy, has just had its first taste of renewed success after playing out a hunch that the northeastern sector of Canada's revered Montney hydrocarbon basin might be housing gas laced with lucrative light oil, sometimes known as condensate. The presence of that light oil amongst the gas in other parts of the Montney Basin has significantly turbocharged the project economics in that area. It seems that Kallima's hunch was right on the money too, after its maiden drill program struck both gas and light oil in ratios that look to be promising. The question now for Kallima is just how big could this new oil and gas play be? Well, let's go right to the source for those answers. So, Alan, your first drill hole into the Montney looks to have been bang on, and I want to circle back to that in a moment. But firstly, can you tell us a little bit about what attracted you and Kallima to that northeastern sector of the Montney in the first place? Because most of the other massive players in the region were more focused on the south and the western areas, weren't they?
Yeah, Matt, that's right. Look, it all started with a very clever bit of geological mapping involving a bit of predictive analytics that spotted this area as being liquids rich, and there was no one else there. So we invested in the project back in 2014 to help build the acreage position, which we've built very slowly and quietly over the years, which has meant we've been able to do it at very low cost. I mean, the average cost for the acreage that we've acquired has been about $130 an acre.
And what's it selling for nowadays?
Well, typical transaction metrics for undeveloped Montney land are around $4,500 Canadian per acre, based on last year's numbers.
Compares pretty well to $130 an acre, right? So you were an early mover in that part of the Montney.
Yes, we were fortunate. Right place, right time, and able to use that clever bit of geoscience to get this position at the right time.
So, Alan, I understand you went to that part of the Montney in the first place because you believed that it was rich with light oil, and in fact the light oil existed amongst the gas. Tell me, why is the presence of light oil so important? What does it mean, and what is that light oil used for?
Yeah, the whole thing about that mapping that we did was predicting this area would be rich in light oil. And the light oil is in demand locally. They use it as a diluent in the heavy oil play down in Alberta. So prices are strong. So for this condensate, you're getting WTI prices per barrel, sometimes a slight premium to that. So it really does underpin, or in fact really turbocharge, the economics of the play.
So it's a gas project with what is essentially way more than just a credit if you've got light oil there, right?
Oh yeah, no, it transforms the economics. The best performers in the play all are getting good yields of light oil.
So, Alan, your moment of truth has arrived. You've been on this journey with Kallima for a couple of years now. You identified this location. You told the market you thought it might have light oil and gas there. You've drilled your first well into the Montney. Let's talk about the elephant in the room. How did you go?
Well, I'm delighted to say it's gone really well. We've flowed our first wells. We've done horizontal wells, 2,500 metre horizontal wells. We stimulated them to flow. The results have met, in fact, they've exceeded our expectations.
So you hit gas and light oil, is that what you're trying to say?
Oh yeah, look, we hit gas and light oil, and we got fantastic rates. I mean, you compare us against the peer group, we're sitting in a really good place. So we're very happy with those.
What sort of flow rates?
Oh, look, maximum rate we got out of the first well, the Kallima 2 well, maximum rate of gas was 10.2 million cubic feet a day, with more than 150 barrels of light oil. And then if you look at the key metrics, as we began to evolve through the test, we were getting a ratio of the light oil to the gas in the region of getting north of 40 barrels for every million cubic feet of gas. And that was increasing as we were continuing to clean up the well.
Okay. And how does it compare to your peers in the area? I mean, they appear to be good numbers, but how do you put them into some kind of perspective? I mean, how often do people drill wells in the Montney and come up with those sorts of numbers?
Well, if we compare our that initial production rate against our peer group, we're in the top quartile. In fact, there's only a couple of dozen wells really sitting with better results than that. So we have to be happy with that. And that condensate gas ratio, and climbing as it was, is putting us into the top half of the peer group.
And it's all about that ratio, isn't it? That's what the market wants to see is a decent ratio of light oil to gas. Is that accurate? And what sort of ratios did you achieve in the end?
Well, we were getting 40 barrels a million cubic feet of gas, and it was increasing. And if we compare that with the peer group, that just on that first well, that's a great result. And then if you look at what people do is as they drill more wells and you go into long-term production, you get the opportunity to optimize that rate. So straight off the bat, in the first well, to slot into the top half of the peer group, we have to be happy with that.
Alan, the Montney has really been a mecca, hasn't it, to major oil and gas global players. Some $5 billion is being spent there every year developing the Montney for oil and gas. Kallima is now rubbing shoulders with the likes of Shell, ConocoPhillips, Petronas, and the privately owned or private equity-backed Saguaro Resources, who I understand are right on your southern border and have been operating with considerable success. So I guess if there's a peer in the region, albeit a considerably bigger one right now than Kallima, it's probably Saguaro. Can you tell us a bit about Saguaro's success? How far away is their land from yours? How many wells have they drilled? How often do they miss? What can you tell us about Saguaro's success?
Oh, Matt, look, we're in an excellent neighbourhood. We've got some quality neighbours, and none more so than our immediate neighbour, Saguaro, who are they're like the big brother that we want to emulate, and we must be like the very irritating little brother that follows them around everywhere. But they have built a land position just in excess of 110,000 acres. They've invested more than $600 million into the ground, drilled almost 70 wells now, all of which have been successful.
All of them?
Well, that's the nature of the Montney. It's a pervasive hydrocarbon system. So really, it's not a question of, are you going to find hydrocarbons? It's a question of the rate of the liquids versus the gas and the productivity of the well. So we're fortunate in that gives us a benchmark to measure ourselves against. It gives investors a benchmark to measure ourselves against. And with the results that we've just delivered, we're very happy to do that benchmarking exercise.
How much have Saguaro spent on their ground to date?
It's in excess of $600 million.
So the capital and return equation is obviously working well for them, right?
Look, they've worked the recent wells they've been drilling have been fantastic performers, and they've worked their way up into the top tier of all the Montney producers based on returns per well. So we figure if we can match, or in some aspects maybe even exceed what they're doing, and that gives us a project that will stack up in the top tier of this whole play.
So Alan, you've successfully drilled the Kallima 2 well. The Kallima 3 well is showing signs of having similar results to Kallima 2. What's next? How far away is cash flow for you guys now if these wells stack up?
Yeah, look, the Kallima 3 wells come on really well and has been showing similar results to Kallima 2. And I think this gives us the confidence now that, we predicted that we were going to be sitting on an extension of this much sought after liquids-rich play. And that's exactly what we've got. So we're now in a position, we've got all the information that we need now to go back to our reserve auditors, have a completely new reserve report written up. And it would give us or a third party the confidence to put in the pipeline over the next year. We can put these wells on production straight away.
Great. And what's the big picture for the Montney? I know that there are some really big players operating up there at the moment, and there are huge plans on the drawing board for infrastructure to support what is obviously one of the greatest hydrocarbon basins in the world today. What can you tell me about those infrastructure plans and how might they impact Kallima?
Oh, look, the Montney is in a really exciting place at the moment. Production has been increasing year on year. In fact, it's increased so much that it's overwhelmed the pipeline capacity. So there is a bottleneck in getting your, particularly the gas, into pipelines. Well, there's 10 billion of investment going on, Canadian dollars investment going on over the next few years that's going to open up the pipeline capacity into the North American market. But the most exciting thing that's happened is LNG. Shell took sanction on a massive LNG project on the West Coast. And that's going to open up the Montney gas to international markets and international pricing for the first time. And to put it into context, I mean, that project with Shell and their partners is up to a sort of $40 billion investment. It's the biggest single infrastructure investment that Canada's ever seen.
How far from your ground is the proposed pipeline?
Well, the pipelines that are going to supply the Shell terminal, we're only about 20 kilometres away from our acreage. And there are several other LNG terminals that have been approved by government, and some of those also have pipelines that run even closer to our acreage. So I think we're sitting in a good place in terms of the resource game for LNG.
It certainly looks like you're in the right place at the right time. Alan Steen, Managing Director of Kallima Energy, thanks very much for joining me here in the Perth Bulls and Bears studio tonight.
Thank you very much, Matt. You're welcome.
If you'd like to learn more about Kallima Energy, its stock code is CE1, a code that you just might want to remember, as it appears that there's much more to come from Kallima as it gets a handle on exactly what it might be sitting on in this most revered of hydrocarbon basins in Canada. I'm Matt Burney and you've been watching Bulls and Bears. For more Bulls and Bears stories, go to the West Australian newspaper website at thewest.com.au and click the Business tab followed by the Public Companies tab. Good night.